It's a crisis bringing back bad memories from the 2008 financial crisis. Because in the financial sector, credibility is everything. We keep our money in banks because we have faith in the system. That faith has been shaken for Americans today with the collapse of two banks in just 48 hours. Today, there is a fear that this contagion will spread, with stocks of Indian banks also being beaten down and Indian startups with money in Silicon Valley Bank wondering what's next. But let's begin at the start of the story that actually ends with the closure of Silicon Valley Bank and New York-based Signature Bank in just 2 days. The story begins with the pandemic, after which the Federal Reserve, that's the American equivalent of the RBI, dropped interest rates to near zero to boost the economy. This found its way to startups with venture capitalists looking for companies to bet on. As startups formed the bulk of Silicon Valley Bank depositors, that's where they parked some of that money. SVB, or Silicon Valley Bank, was founded in 1983 and has the who's who of startups as their clients, including companies like Pinterest, Shopify. The post-pandemic gold rush for startups meant that this bank's deposits also grew 3 times in 2 years. They invested some of that extra cash in long-term real estate securities-backed bonds. Essentially, it was a risky bet. When the tide turned and interest rates started going up, they got caught between startups wanting to withdraw money because their funding was drying up and the value of their investments in bonds dropping because of interest rate hikes. Simply put, a perfect storm. The situation came to a head last Friday when depositors of the bank panicked and wanted to withdraw their deposits in large numbers. That's essentially what happens when there's a run in the bank. The stock fell, the bank couldn't raise money quick enough, and the Federal Reserve had to step in. Something similar happened with Signature Bank. Today, US President Joe Biden made a statement to say that the American banking system is safe. Listen in.
No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable.
So why and how does this impact India? What's the Indian connection? For one, in a globalized world, there is fear of financial rot spreading. Remember the 2008 global financial crisis? Indian bank stocks took a hit on these fears today and the Sensex was down about 1,000 points. Secondly, Silicon Valley Bank was also banker to Indian companies. At least 40 startups have funds in SVB. The bank itself has invested in nearly 21 firms in India. The IT minister will be meeting with startups to figure out what next. So is this a contagion that could spread? Is it possible to now bring it back in place? And what's the underlying message here? Was it one of greed by these banks? To speak more on this, I'm joined today by Ganesh, serial entrepreneur, with us on the show. I'm speaking also with Nitish, Mittersain. He's founder, CEO, and joint MD of Nazara Technologies. Nitish, great to have you on the show. This is one of the banks, one of the Indian companies that have money in SVB. Ambareesh Baliga, independent market expert, with me on the show, as is Deepak, Shenoy, founder and CEO of Capitalmind. Great to have all of you today to bring our viewers an exact idea of what's going on. Nitish, I'm going to begin with you. And you have put out a statement today. Your company has put out a statement today saying that 2 subsidiaries have some exposure in Silicon Valley Bank. I want to understand the very basics. Why do Indian startups need to open accounts in US-based banks?
So in our case, these two subsidiaries of ours are actually US incorporated companies. So they're not Indian startups in that sense. They're companies operating in the US, providing services and products to US consumers. So they're completely local operations in the US. And therefore, it makes more sense for them to have a local American bank for all their operations. So I think that's par for the course. Obviously, we had money in SVB. We thought it was an extremely reliable, top 20 US bank, and the events kind of took us by surprise. We are going to review our, risk management further, but in any case, this is what happened. Luckily for us, both these subsidiaries are, well capitalized beyond this 64 crores that were in SVB. Are profitable businesses for us, cash flow generating businesses for us. So their business does not get impacted whatsoever. And with the recent developments, we are very hopeful that our monies will also be recovered very soon.
Yeah. Nitish, you said this is par for the course. And, I wanted to understand that a bit because a lot of Indian companies who offer services to US clients end up incorporating companies there. Is it because it's easier for transactions, for taxations? What is the underlying reason?
No, I think look for a US operation, right? For money there are continuous transactions that are happening, whether there are receipts or payments being made to vendors, and locally in the US market. Now, if you're going to run a account of India for running those operations, I think it's far more complicated managing that aspect through RBI, etc. So it makes sense. I think for businesses that are operating in India or operating out of India, it's a separate topic. Ideally, it should be the account should be in India. But for an American company to hold an Indian account would not make any sense.
Right. And are you worried that this contagion will spread, so to speak? What do you think will be the impact on funding for Indian startups and for Indian companies that have money in SVB?
It's surely a reset for the way startups were operating in the last few years. There has been a funding winter that has set in a last year or so, and I think events like this obviously will drive more pessimism towards availability of free money that was there in 21. So yes, there will be pressure, but I think to a certain extent this is good pressure. India has the opportunity to become the startup capital of the world, and I think once in a while stress test like this helps startups correct the way they are thinking, value the money they're spending, and focus on the right real metrics instead of vanity metrics. So all in all, I think startups that can buckle down, focus on surviving this year will hopefully emerge stronger in the coming year.
Yeah. Deepak, Shenoy, explain to us what have we seen with SVB and with Signature Bank. Is this greed? Is this poor management? Or is this just wrong time, wrong place?
Yeah, probably a combination of the three, Tamanna. I think the factor of greed came in because they got money from startups where they had to pay nothing. It's like a current account, right? So they didn't pay any interest to these startups. And then they had to deploy the money. They actually chose a good security. They used government-backed securities. So these don't have a risk of default. That means they will not, if you hold them all the way to their maturity, they will not lose any money. But the problem is you don't have, you can't hold them all the way to maturity because these startups are demanding their money back because they need to spend money. And today, the value of those securities is 15 to 16%, in some cases 25% lower than when they bought them. So if I bought something for 100 and now it's valued at 75, even if it will over a period of 10 years go back to 100, if my customers are demanding their money back today, I can only give back 75. So I have a problem in the remaining 25, which is what happened in SVB's case. Any bank of the size of SVB, at least, which is, by the way, as big as HDFC Bank in India in terms of just deposits, I would say if they experience a run of the kind that happened on Thursday last week, they would not survive. So, the SVB bank's issues were complicated because everybody in the venture capital world decided to act together and withdraw their funds all at once. They would try to withdraw $40 billion on a single day. The lessons, I think, greed is one. Of course, a bank should have kept a lot more liquidity on hand. The second is, of course, their lack of communication. So they, unfortunately, in the financial world, you don't tell people not to panic, because in the financial world, when you say that, everybody panics. And in a press conference, the CEO told everybody to relax and calm down, people decided to do the exact opposite thing. So it was a combination of greed, bad communication, and bad practice at the bank itself. The combination of the three is what brought the bank down, and Signature Bank as well. So it wasn't really bad lending. It was possibly good lending with not enough of a watchful eye on how long you're lending and how easily your customers can take out their money.
Ambareesh Baliga, I'm speaking to you after a long time. So everything aside, it's great to have you on the show after ages. I want to understand if we're being too kind to SVB. I mean, it was a secret to absolutely no one that there's a funding winter and startups will need some of their money back. And it was a secret to no one that the Federal Reserve is increasing interest rates. So how do they find themselves caught in a bind, and how do we know today that this will not spread?
See, I think the biggest mistake they made was utilize short-term money, because the money deposited by the companies, by the startups, was for short-term. They utilized the short-term money for long-term sort of paper where they had invested. And they were caught on the wrong foot. At least they should have known when the interest rates are going up that the debt paper prices will surely come down. And clearly they were caught on the wrong foot, no doubt. And like Deepak said, clearly, as far as the banks are concerned, any bank for that matter, it's the question of trust and confidence. The day trust and confidence is lost by the depositors and everyone queues up, I don't think any bank can really stand up and clear off everything. So I think that was one of the biggest issues which this bank faced. And once it has started, I think that contagion effect will be felt. We've already seen Signature Bank. Now we have also seen Silvergate. I think we'll see a few more. Despite President Biden's assurance, I really don't see this stopping immediately. So as far as US is concerned, I think we could see that problem. But as far as India is concerned, I think it's going to be only a sentimental effect. Because, I really don't see any issues for the Indian banks because of this issue. There are a couple of startups who have, accounts there, who have business there. So they could be affected to a certain extent, just like what Nazara has announced 2 days back. And I suppose some of the SaaS startups who have exposure in North America will also face those issues. But overall, as far as the Indian stock markets are concerned, I don't think there's anything much to worry, except for the sentimental damage, which I think will be felt for a while.
Ambareesh, that's absolutely true in terms of logic. But I go back to 2008, where we had nothing to do with the start of that global crisis.
That's true.
But everyone did eventually suffer.
Yeah, I think, Tamanna, the difference between 2008 and now is that in 2008, if FIs were selling, our markets would have, had really cracked because of the FIs selling. Last 3 years, FIs have been selling in India and our markets have been going up. So we are no longer dependent on the FI money. It is the domestic money which is actually, holding the markets up. So I don't see, because of this issue, we will have a crack. We may have a correction, but not a crack.
Ganesh, let me come to you on the lessons really for the Indian startup ecosystem. And I asked that question a couple of times to Nitish. He gave me politically correct answers. But I want to understand if there is a policy relook we need to make it easier for Indian companies who also have operations in the US to be safeguarded here rather than be exposed in this way.
Yeah, so I think there are two different aspects of it. One, like was mentioned by Nitish, when you have a US operation, whether you have US incorporated company or US arm or subsidiary, or even a US branch operating in US, paying vendors, paying employees in US, receiving money from US, having a credit card, consumers paying you through the credit card. For all these purposes, you need to have a US bank account only. The chance that you will be able to have an Indian bank account, like he mentioned, is practically impossible. I mean, 15 years back in our Tutor Vista, we banked with Silicon Valley Bank. We had an operating account with Silicon Valley Bank, and we used to have every day customers used to pay by credit card, which used to get credited there. We used to use that money to pay Google. Also, another slight, one more point is that for monies that you earn there, you would rather spend there with Google and all that, because if you bring it to India, you have additional tax, GST, and service tax, and all that thing comes in. So it's operationally, you have more leakage. So for all these purposes, you need to have a bank account in US. Now, let's not take this incident to change that. That structure is not going to change. The good news is that FDIC has guaranteed that depositors are safe. So the headline news is none of these startups, even Indian startup, including Nazara, none of them, their entire deposit, not just the 250,000 insured, they have guaranteed it is safe. So we are in a very good place now. As far as these last 4 days, we have dodged a bullet, to say. One. You also mentioned about 21 companies that SVB has invested in. 2 of my companies also received investment from SVB, Bluestone and Tutor Vista. Now these happened, I mean, even Paytm received it, okay, right? This happened 15 years back. So this whole investment took place between 10 years back to 20 years back. That is Silicon Valley Bank investing money. So they gave us money, not the other way around. Their money was with us. For that, we issued them shares. So there is nothing that happens to them is going to affect them. But by the way, because it is 10 to 20 years old, all those shares Silicon Valley Bank has sold for a profit and exited. But what I'm saying is, even if they were not exited, they would be a shareholder and the money flow is reverse. It's like I give you money. If something happens to me, you are not going to be affected because you have taken the money, used the money, enjoyed the money. Okay, you may only be happy that I'm no longer around to get it back from you. So that is the situation. After that, nobody has invested. But I want to highlight on 2 specific things why this has escalated so quickly now beyond what the experts said. See, what has happened now is social media is so prevalent that any news that happens gets forwarded, liked, commented, memes are made and all that stuff. Instantaneous spread of news, which 10 years back, if it had happened, only the proper media would have written about it. They would have done verification. You would have, like you are doing now, spoken with experts, taken time. Now, whether news, fake news, rumors, whatever, gets shared instantly. So one is the ever-prevalent social media has made it instant, sudden, and very speedy to get the news spread. The second thing that has contributed to this run on the bank, which otherwise 10 years back would have been difficult, is mobile and internet banking. Now, I'm not blaming social media or mobile internet banking. They are very good, but that is the cost. So what happened today? When I hear a news, whether half-baked news, whether true or not, sitting in Australia, I'm a SVB US customer from Australia. I take out my mobile phone. I said, why do I want to take a chance? I do immediately start withdrawing. So $40 billion physically 10 years back would have been impossible to withdraw. You will have to write.
But you know, to be fair, Ganesh, this is not the first run on a bank in history.
No.
Run on banks has happened pre-social media as well.
No, the short time, within 1 day, 40 billion to move is impossible without social media, without mobile internet banking. Now, the challenge now for the regulators and all over the world is, in today's world, because of mobile internet banking and social media and instant response, the time to respond has shrunk drastically. So they need to have new norms, new governance, new triggers to arrest this, because this may happen again where within 1 day you will have 40 billion moving. Whereas earlier, what would have happened?
We still don't know what's happening overnight. There are several US banks, regional banks right now, whose stocks are being battered. You know, trading in them has been halted because investor confidence, despite what Joe Biden is saying, is not bad. No,
shareholders have taken the risk.
But that's true. But that's also what worsened the situation in Silicon Valley Bank. So we have to, my point is we have to still wait and watch. I want to come to Nitish on that point. Was it also a lot of startup companies panicking that tipped the scales?
Of course, I mean, startups have limited amounts of capital, and most of them are, if they are banking with, let's say, SVB, probably having most of the capital, all of the capital at SVB. So if that suddenly disappears or gets locked out, I mean, they wouldn't be able to make any payments from the next day, right? They have teams to pay for, salaries to pay for, and a lot of other costs to pay for. So let's say a larger organization like ourselves may have multiple accounts or multiple ways to run around it. But for younger startups, this would be definitely a situation worth panicking. And I think that's surely what happened. I think many of them in the last 3-4 days have reached out to investors, or investors have reached out to them to arrange bridge financing, or some other companies have been offering these kind of bridge financings. Again, I think now that the US government is backstopping the depositors, hopefully that money gets out fast so that these startups can get funded again and, go about their life as usual.
Yeah. Deepak, Shenoy, this thing about backstopping the depositors and saying at the same time that taxpayers will not have to pay at all, but you know that the insurance covers $250,000 of deposits only. Where is that money going to come from? Is it all adding up for you?
Well, it seems like, see, the difference in whether the taxpayer pays for it would be a bailout where typically both, all including shareholders would get rescued, right? So you get the bank capitalized with funds from the taxpayer. This is not how it's working. The bank is actually being liquidated, and FDIC is assuming all the assets, which means any loans that are currently to be paid to Silicon Valley Bank will be paid to effectively a bank owned by the FDIC. FDIC has the capability of holding those securities that SVB has all the way till whenever they mature. So they will not have to take any loss if they hold those securities to maturity, and they can provide the financing for people to exit, and that financing will be provided by the insurance pool. So in a way, the taxpayer is not paying; it's a depositor pool, insurance pool that is paying, which means depositors and banks will pay more in insurance in the coming years to pay for this, indirectly or indirectly. Of course, it goes back to eventually the people, but I think right now it's not coming out of the taxpayer pool. That means the government's not paying for it. In fact, what I would say over here is the depositors have been protected. In India, it has happened in the past. Lakshmi Vilas Bank, for instance, went bust. DBS took over, made all the depositors whole. Shareholders lost all their money. And only senior bondholders and depositors got all their money back, or got to keep their money in the bank. So I think that is, we've had precedent for this all over the world, where a bad bank is taken over by another bank, and that process might still happen with parts of SVB going forward. I don't see this as a problem or a massive bailout just yet. I think there's some bit of moral hazard here, but management has been fired. The bank shareholders lose all their money. It was $200 a share 1 week back, and today it's zero. So there has been people who have lost a significant chunk. So I think there has been punishment enough. So, but also, I think the system is currently in a very scared state of affairs. A lot of other banks, if they were forced to take the same losses that SVB has been forced to take because of the bank run, they would be in trouble, which is why the banks are seeing some kind of fear today. But I think it will take the government and the Fed few words that will soothe the market. Eventually, this should come back, because they have effectively said we'll backstop deposits. Don't worry about it.
Yeah. Ambareesh Baliga, do you see this ending here? This crisis, as of now, the American banking crisis ending here, and the impact on India being very, very limited, if at all?
No, like I said, I don't see the crisis ending, immediately. I think it can carry on for a while longer. I think we need to also see as to what Fed finally announces, because people were expecting a 50 basis point hike. And in case they don't increase the rates, I think it can be controlled to a certain extent. Otherwise, I think this contagion may continue for a while longer as far as US is concerned. As far as India is concerned, like I said, I don't think we'll really get affected as such. Sentimentally possible, yes, for a while, because of which we could see the markets correcting, but it will not be a crack, like I said earlier.
Right. So markets correcting is one part of it. For most of our viewers, you need to know that your money is safe in banks. It definitely is in Indian banks. Our equivalent of this insurance per account is 5 lakh rupees now. So any deposits you have of up to 5 lakh rupees are safe in your bank account, and they have been insured. Well, thank you to all of you for joining us and taking out the time to break down this very important story for our viewers. We're taking a very short break, but on the other side, India scripts history at the Oscars with 2 wins. I speak exclusively on the other side with RRR singer Yazin Nasir. Stay tuned.